All right, we are going to discuss a few basics, mainly clean traffic and how it helps us. All right, so when you're watching your zone or when you're using your zones, always make sure that your zones, they are valid on the higher time frames and on the lower time frames as well. You don't need to have a lot of zones. The moment you have too many zones and you can see your chart properly, you have a lot of zones that are invalid. So for your trading to be perfectly fine, even if you're trading on the lower time frames, you need to have a very few zones, because the ones that you have on the higher time frames always work best also on the lower time frames. For example, if you look at the action we have, where price is at right now around these areas, you can see this is previous breakout. This is from the weekly time frame, right? This is daily high from the daily time frame. Last week's lows, you can see how they are highlighted on the side. That's last week's low. That means it was highlighted on the weekly time frame. Weekly low, it was highlighted on the weekly time frame. And then if we take the chart to the 4-hour time frame, let's take it to the 1-hour time frame. If we check the chart to the 1-hour time frame, you can see last week's lows. You can see how price even tried rejecting over there. You can see let's check the other ones. All right, daily high, you can see how it's also reflecting on the lower time frames. Last week's lows, you can see, well, on the 1-hour time frame right now, you can see how it was being respected on these points over here. So your zones should not be too many, should be very few, and the ones that you have on the lower time frames should also be valid on the higher time frames, and the ones that you set on the higher time frames should also be valid on the lower time frames. All right, so a very few zones equals good. You're most likely to have valid zones when you have very few zones, because you don't have too much distracting you. And one more thing you need to understand about zones is you need to concentrate on where price is at. So when you're drawing your zones, right, you need to concentrate where price is at. Like at the moment, price is around this area, right? It won't make sense for us to keep drawing zones around this area or this area, because price is right here and it will take a lot for it to end up here. All right, so when you're drawing your zones, especially for people who day trade, always concentrate on where price is at. Right now we said price is right here, right? So if price is right here and we want to add zones to see where price might end up next or where it might reject, what we need to do is to look at our left, right? So far we already have highlighted a high. So since price opened, price created this high, right? And then it dropped, came back up, right? Created another lower high. It dropped again, and then it came back up to retest. That means price has created a high right here since price opened. All right. So now we're saying price has created that high since price opened. What happened after that? We also had a low that was being respected around this area, but price has broken through. So since price is broken through, this one is now unnecessary, right? So since now it's now unnecessary, because now we have a candlestick that's running through this area. This candlestick is running through this area. And if we put a line over here, if we put a low over here, that means our candlestick or our line is cutting through candlesticks, and we do not do that. All right. This is clean traffic. All right. So that's what we mean by clean traffic. This is also clean traffic, clean traffic, clean traffic. So when you have candlesticks that are going down, right, without any conflict, or going up without any conflict, that is clean traffic. You can see over here, the candlesticks are going up. That's clean traffic. Over here, that is clean traffic. All right. So if that's an example of clean traffic, then what's an example of not clean traffic? over here, this is not clean traffic. 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 And we say, when we say not clean traffic, we're saying candlesticks that are printing next to each other, or right here. See, price is going down, but it's not going up. It's not going down in a straight line. For example, this is going up perfectly fine, but this is not going up perfectly fine. All right. So that's what we mean when we say clean traffic and not clean traffic. And we use clean traffic to our advantage. And when there's no clean traffic, when there's some conflict, we use that as areas we watch out for price to reject or for price to play around it before it makes that continuation. All right. So let's combine those zones and the clean traffic. So what we're saying is we already highlighted our high that we've been given around this area. We could put a minor zone. You can take this line because that's unnecessary. And we put it over here because for price to reach over here, it has to break above this minor high that was created there. All right. So now we need to see to our left to see, okay, so where is price heading to? Where might it find some conflict and where might it not find some conflict? All right. So now look at this, right? We could have found this on the higher time frame and it respected. Remember, there was nothing over here, right? And it respected. But since now this has already been acted upon, we're now using the new information that price has given us, which is this high. So instead of our zone coming all the way to this point, we can only now use this area because this is the new information price has given us. All right. So since there's still nothing to our left, we can say, okay, now we have a resistance around this area. All right. So this is the area that we're saying price might find some conflict and it might find some rejection and it might want to go higher. All right. So since there is some conflict around this area, we now watch. All right. So we didn't put our zone because we found something all the way over here or over here. It would have been fine to say, okay, we're using these zones or we're using this zones. This information is very much valid, but it's not as valid as this information we have right here. This is the valid information. This is the information that we use to our advantage. All right, because this is where, if we go from where price is at right now, if we go to our left, there is nothing here, only this. All right, so now this is what we're now using to our advantage. This is the information we need. So from here, we can also look down. There's nothing left. This is also clean traffic. We have a clean candlestick, that is clean traffic, right? Then you had some conflict over here with the bearish candle, right? But then after that, we also had clean traffic, that where price was able to move smoothly down. So since we have some conflict over here, we can expect price to reject over here, all right? So after that rejection, we still have clean traffic to our left. So now we can put our chart back to normal. We now know why we have a zone over here and what we can expect it to do. So since we have noticed that price might reject over here, what do we expect it to do? We can expect price to hit this, come back for a retest before it goes lower. All right, that's the only thing we can expect, or we can even expect price to reject, maybe play around this area before it can go lower. All right, so now we have a high, a minor high that we can also watch out for, and a low that we are watching out for. All right, so we know if price goes below this low, it's most likely going to go lower. If price comes above this high, it's most likely going to hit this high first before it goes anywhere else. Okay, that's what we're saying. So we have analyzed the information that we have, and we're now using that information to our advantage. We did not go all the way up here. We did not go all the way up here to determine what's going on. No, we did not do that. Or to go all the way down or all the way to our left. No, we only use the information. If you're day trading, you need to be good at looking at the information, the area where price is at, which is this area. Then you see, okay, if price is gonna go higher, how high can it go? If price is gonna go lower, how low can it go? All right. Also learn to use the daily time frame. Because right now, if you look at our daily time frame, right, our previous daily time frame was bearish. If our previous daily time frame was bearish, we look to our left, okay? So since price is being pushed down, is the clean traffic, and yes, we do have clean traffic. See this candlestick right there, that is clean traffic. So price is most likely going to push lower to the bottom of our candlestick because there is no conflict over here. All right. So at the end of the day, if we do get a strong bearish candlestick that looks similar to this one, or even similar to this one, remember price always tries to recreate what it has done before in the past. And if you look at those candlesticks, it's more likely to happen like that. So we can say, yes, price might reach all the way down there, right? But on the lower time frames, that's when we get all the conflicts and whatnot, because on the lower time frames, you might have some minor zones. If you see on the 4-hour time frame, we still have clean traffic, candlestick after candlestick going up, right? This is clean traffic, right? But that doesn't necessarily mean that it will be the same, because on the 1-hour time frame, that's when we have some sort of a conflict to our left. So if we have that conflict to our left over here, that means price might take some time before it pushes lower to go where it wants to go. It might get rejected here for a little bit, and then it might push lower later, maybe during New York session, even during London before New York session opens, depending on how much volume is in the market. All right. So when you're day trading, those are the most important basics that you need to use to your advantage. You can simply just look at the daily time frame. Okay, one more time. Look at the daily time frame, right? Okay, the daily time frame is bearish. Our previous daily time frame was bearish. So if our previous daily time frame was bearish, we look to our left, because we know that today's candlestick might most likely be bearish as well. So we look to our left. Is there any conflict? Nope, we have clean traffic. So if we have clean traffic, then we know we highlight where our next target will be. All right, our next target will be somewhere here, right? Or target, right, for the daily time frame. So let's say daily target, right? Now we know that we're expecting price to go lower. Let's go on the 4-hour time frame. On the 4-hour time frame, what can we add? We check where we put our daily target. We need to put it somewhere proper, and we can say at the end of this candlestick. All right, last bearish candle, this is the area. This was the range, right? Before price went higher, this was the range. So if this was the range before price went higher, we are aiming for the high of that range before we can talk about price getting inside the range. All right. So since we're aiming for that high, that's where our target will be. All right. So now on the 4-hour time frame, we know we have clean traffic and with our target. We just go on the 1-hour time frame, and we use that information we get on the 1-hour time frame for entries and to know when it's the right time to, or what we're looking out for, the right time to enter and what we're looking out for. The 1-hour time frame, we've already highlighted what we want. We know what's on the daily, we know what's on the 4-hour time frame. So now on the 1-hour time frame, we need a signal and a confirmation. So in 1-hour time frame, we already know price is pushing lower, right? And we know the high that it might come back to retest between this high and this high. Those are the two highs. Price might want to retest before it goes lower. So if you are at a price like this, you set your limits maybe here, or if you want to be more careful, somewhere around this area. And then as long as price does not come above this area, you can always expect price to go lower. All right. So now you just watch and wait and see to see if price will hit your limits. If it doesn't hit your limits, then you know that we're expecting price to go lower as soon as it goes below this area. So you just want to see a 1 hour candlestick or a 30-minute candlestick closing below this low, which can push price lower to where you are expecting it to go to. All right. So you have the area that you're expecting price not to go above. That would be your stop loss around this area. You have your 2 points for your limits, right? If your limits do not hit, you have your point for where you want to see a candlestick closing below, which will push price lower. All right. Now that's how you look out for your trades during when you're day trading. All right. Any questions, please feel free to ask, and we will continue later as soon as we have more information.